If just one person gets the chance, the effect can be life-changing for entire family. Do you know that? Well, on that note, I, Dr. Nidhi Srivastav, Associate Professor, IIEBM, welcome you all for one more interesting session of IIEBM's Induction Program Batch 2021-23. Before introducing the guest, quickly I will brief you about the flow of the session. This session will be of 1 hour 15 minutes, where first 1 hour will be knowledge sharing by the guest, and rest 15 minutes will be question and answer. You can type your question in the chat box during the session. Microfinance is an idea whose time has come, and our today's guest will help us understand the same, as he will share his views on introduction to microfinance industry in India. So let me welcome Mr. Sumit Mukherjee for the session. Mr. Sumit has recently started giving the consultancy services for a startup company named Swajan Vikas, and there he is giving solutions related to people development. Previous to this, he was holding the position of Vice President Learning and Development at Swatantra Microfinance Private Limited. He is a strategic planner and has an experience of more than 16 years in steering training and development initiatives, ensuring alignment between competencies and leadership development strategies to achieve operational goals across telecom, insurance industry, and finance. He has worked with renowned brands like Idea Cellular Limited as DGMHR Management Development, Bajaj Alliance General Insurance Company Limited as Deputy Area Manager Training and as Training Manager with ICICI Prudential Insurance Company Limited. He holds the EPHRM degree from one of the most prestigious institutes of India, IIM Calcutta. He is a specialist in learning and development, talent assessment and organization capability building, leadership development, and NLP coach. So without taking much time, let us start this session. Over to you, Mr. Sumit.
Yeah, thank you, ma'am. And my most heartiest welcome to every person who has joined this Institute for a Better Career. And they are the leaders for tomorrow. So it's my privilege here to be a part of you people, speak to you up about certain things which I have acquired in my career and to share it with you so that you all can make the best part of it. So let's start the day with an overview about one of a major industry in India, which is the microfinance industry. So let's get into the small presentations. Yeah, thank you. Right, friends. So I hope you all know much about this industry. Today, it stands to be one of the main pivot of our Indian economy. Microfinance industry is not a very glamorous industry which you see across, but it's one of the pillars of how India is growing. If we talk about this industry, so what is this companies all about? What are these microfinance companies all about? See, India is a land of agriculture. Basically, we all know it's a developing third world country. It's a developing country. And in a developing country, poverty is one of the key elements which is there and what these economies need to fight it out. Under this particular segment, all governments are trying their level best across the world to help and eradicate poverty, but it's not easy. Hence, what we come across are different models which the companies adopt to take up this eradication of poverty or into it. One of these particular concepts which is there is of microfinance, wherein there's a very renowned proverb which goes on that if you give a loan is better than a charity. Now, how it is? So if you see, just by the sake of giving certain charity to somebody does not solve a long-term issue. But if you help somebody with a loan which can make him earn his bread and butter, definitely solves it. So microfinance industry, the main goal of this microfinance industry is to help India or other developing nations come out of this particular setup. Here, the microfinance industry is just like another company which is registered under the RBI. Now, under the RBI, there are different segments where the companies are registered. Some are insurance, some are banking, some are loaning companies. Different forms of companies are getting registered, out of which one of them is the microfinance industry. Now, what are the main intention of creating microfinance industry in an economy like India? India is a land of lot many people are villagers and on a lower strata of the society. Now, if people are from the lower strata of society, definitely they may not have the privilege of obtaining all the facilities which a bank may be giving or other organizations or people of the higher societies are availing, like easy credit, easy loans. I can just let you all understand this very easily. I am sure many of you have observed a home loan process. Many of your parents or have taken a home loan. Do you still remember the amount of tremendous paperwork which was getting done, the documentations which was getting done, all those verifications and authentication of salary, the return, mortgage, everything was going on while your parents or somebody known to you were taking a home loan. Now, do you think this type of loaning facility will be available to a rickshawala or a sabji vendor or a grocery store shop? Does he had so much of potential documentations and all the stuff to support himself to get into the mainstream loaning? No. So what is it for him? So this here comes the concept of microfinance. Microfinance is basically for this society who don't have any documentations or lot much of collateral securities to keep. Microfinance industries has a specific style of working which is secured as well as it is helpful to this segment of it. And that is why a lot many companies, even RBI and government are focusing deeply into helping this industry grow. Today, we will be talking about this particular industry as a whole, not about any particular company, but the industry as a whole. Now, the basic part of this particular microfinance industry is related to the rural development. Now, why rural development? Again, as I said in my previous conversations, for the urban societies, urban sort of livelihood, urban sort of salaried class people, you have so many options of credit and loaning. But if you look back to the rural segment where people don't have an income to support in a fixed salary pattern or in an established business pattern, or they are very from the lower status, or they may be a sabji wala or a carpenter or somebody from that very segment of the society who are underprivileged to have bank loans from them, because the formalities and the responsibilities of banks are different. Now that's where the formation of this microfinance industry come into existence. So what exactly the microfinance do? In a layman's language, it borrows capital from the banks and distributes it to these people on a different platform level, which is the microfinance platform level. Now, what are the goals of microfinance? First of all, is to look how to eradicate poverty through small loans. Now, these loans can be from 10,000, 20,000, 30,000, that much. And it is for those set of people who are a daily workers, self-employed, a cottage industry, a papad industry, a cow, a milkman, all those sort of people who require a small capital, 30,000, 40,000, 10,000 even, to start up something of their own and help themselves and their families for this. So the main goal of microfinance industry to cater to this segment of population and help them earn a better livelihood. Now, one more interesting thing is here is that it has a special focus on women development. Now, much of the labor class, you would see that the men of these families go out for work. They are working across in urban areas. They are coming down to urban areas and doing some labor job or something around them. What about the women segment, which constitutes 50% of our Indian populations too? So how could we help them to help their own families, earn for their own families? So the concept of self-employment, promoting them, helping them with the knowledge and the technology or whatever is required along with the finance. So people at a rural belts can also start being productive and produce something which ultimately lands up to the Indian economic growth. And by this, they can raise the standard of their living. They can have their children go to school and fund it. So all these concepts work very predominantly when we talk about a microfinance industry. Another important thing is uh, we all see a lot of migrating workers, which I was just making a point. People migrate from the villages to the urban areas, creating more and more pressure up here. What about if we could help people earn their livelihood at a village level itself? Now, if that's so, how could that help? By providing the proper counseling, training to these villagers to start up their own things, own business, maybe some pottery work, maybe some cottage industries, maybe some vegetable growing industries or other agricultural products where you have repeated number of crops. So all those ideas, getting them into an animal husbandry, poultry farming, fishing, all those stuff, we can help these rural people by funding them and help them to earn their bread and butter at their own villages itself. So these are certain of the goals through which these microfinance industries are operating in India. The concept of microfinance started long back. It was started by a gentleman called Muhammad Yunus. Now, he happens to be a Nobel Prize winner as of now. And it is a gift of his, it's a brainchild of him, which has come down to as a long way in eradicating poverty or eradicating or helping the economies, all nations' economies today to get into this very segment. I will tell you a little brief about it. He was born in Bangladesh in June 1940. After completing his BA from Dhaka University and his post-graduation in economics, he got a scholarship from US wherein he went for his PhDs in US. He returned back to Bangladesh in 1971. Those were the days when 1971, 1972, the new Bangladesh was getting formed. The time of a lot of agitations and entire political turmoils were going on. And during this time, the people were the most hard-hit sufferers. He was there. He understood their problems. And as for the time goes in, by 1974, he started this concept of loaning. He went down to bank. He asked them, why don't you loan this poor people? At that time, all banks were skeptical about loaning a poor fellow. Why would a bank loan when he knows how will he repay? Then what he did was his own brainchild. He took a batch of 42 women and to this, 27 women first. And for that, he invested his own capital of just $27. Now, I'm talking about a long back, but then his own savings of $27. And What he did great was he created the concept of GLP. Now, what is this? Joint Liability Group. Now, what is this concept? I will take up in the next slide. There are two important concepts in microfinance: self-help group and joint liability group. But then, just to brief you, joint liability group is a group of members who take the responsibility of repayment of each other as a group. And this is very simple. If a group of 10 people, suppose one of them cannot pay, the others would contribute a little to help repay the person. Now, such a beautiful concept today forms the basis of a big industry in many developing countries, underdeveloped countries. Now, this is something very important. A poor people may not have a lot of land as their collateral. The poor people may not have too much of knowledge and knowledge related to the financial literacy, but they are very simple people. They know to keep their promises. And when it comes down to their society, a social group of 10 people, 15 people, they try to maintain their social stigma within those 10 people and they pay it. Moreover, there are many things which has come down in the long passage from 1974 till date, and the journey goes on how to streamline and better the process of this fundamental concept of GLP, joint liability groups. Okay, now going ahead, by 1974, he slowly formed a company called Grameen Bank. The objective of this Grameen Bank was to give loans to these people for a short-term loan, maybe 6 months. Earlier it was 6 months or 1 year. And under this, a systematic payment schedule was created so that somebody could pay back. And to his surprise, people committed, the group of women committed to their promise and they returned back the money. Going ahead for this last 30 years, this entire system has developed basis those project pilot things. Now, coming down to the development stages of microfinance industry in India, we also see this developmental time long back, right from the time of 1974, where Seva banks were first formed. Now, what are these Seva banks? Seva banks were a group of people. It was more about creating a group of people, giving them trainings to do something, maybe creating something, or small industries, or making papad, achar, all those masala manufacturing, everything which can work in a cottage industry area, or weaving, or fishery. Now, this Seva industry, they teach people around all those stuff and help them with finance also. Going ahead, as further develops Indian economy, we can see the development of NABARD. On the same principles, NABARD was developed in 1984. It was for the rural development, agricultural base, and other rural developmental areas. And through NABARD, banks started funding lot many village people in different ways, whichever they can do. Now, we see the rise of the self-help group by 2002, wherein, now what is this self-help group? Now, this particular concept came into existence, which is just a little away from the joint liability. Self-help group, the funds are a common forum. You form a cooperative type of concept wherein you are an association of few members. A fund is issued to the group. There's a group head who manages everything, and all the people are benefited as a cooperative. They do their work together, return the money, and that's what's called the self-help group. Here, the liability is not about an individual, but it is for the entire group. The liability of the loan lies for repayment lies with the entire group. Now, everybody contributes in the group's production, marketing, sales, and profitability, and then the group returns the money to the lender. Going ahead, the concepts of MFI comes in. Now, how did it go? By 2014, there were many companies, basically in the South India, who started giving loans to the group of people. Now, here they were also making something as their collaterals, which was one of the key issues in the later span of time, which I'll come down. Some kept golds, some kept the land documents, some other items, and they in the focus went out from NGO concepts to a profit earning concepts. Now, how does it go? They have their own rate of interest, flying rate of interest, mortgages in terms of unable to repay. Then they give a second loan. Okay, you take loan to pay the first loan, and then you take the third loan to pay the second loan, and thus cause entire vicious cycle of loan indebtedness. Ultimately, it was so tough that people were started becoming defaulters. Now, how that led to it? When people started getting defaulters, they started the recovery concepts, which were harsh to the people. And ultimately, what happened? People started suicides. There were so many, around 200 people, suicide cases, mainly in Andhra Pradesh, the Krishna district of Andhra Pradesh, which is also known as the Krishna crisis in the microfinance industry. Now, here the government has to intervene and stop this loaning concepts or processes companies as a whole. So, Andhra crisis is considered to be one of the phase wherein this has to be. Later on, by the intervention of RBI's regulations and other RBI interventions, the process again started, because once you stop loaning, that's not the solution. If you stop loaning, the economy goes into starve. So what happens? We have to keep loaning and control the loaning rather than these processes of unscrupulous extraction of money and overburden of loan. Somebody needs to control them. Somebody needs, and that's where the role of RBI walks in. So RBI started governing this NBFC microfinance companies. So now every company who has to perform has to get into RBI's registrations before they perform an microfinance activity in India. By 2009, there was a body which was created. It's a self-regulatory body, independent body, which is called the Microfinance Institution of India. The microfinance industry, all the microfinance companies are the part and the member of this particular institutions. It's not a government body, but its recommendations are highly appreciated and accepted going ahead by the RBI. And basis the recommendations of MFIN, RBI decides different norms. Even the recent moratorium, which you must have heard, was a part of a recommendation of an MFIN companies. MFIN companies started creating their own setup for themselves. I will be covering the MFIN in a brief going ahead. But the major reforms which came down to the microfinance industry was in 2012 by the Milligan Committee's report, wherein they talked about stopping the overburdeners. So what did they do? They allowed only a family could have X amount percentage of loan, and only one or two or three companies. So these type of restrictions started coming in for microfinance companies to operate. They cannot give an amount of loan to any person without understanding the paying capacity of that people. Presently, the figure stands to 1,25,000 rupees. That's the maximum loan a family can borrow from any microfinance companies. Also, they can borrow from maximum 2 companies. The third, if it is found that this borrowing from the third company is fictitious, and the companies can stop the payment or take actions against those loans. Those are the malpractices concepts. So two is what generally it happens. 2 or 3 is what is permissible under the as per the present laws. Now moving ahead, this was a brief about it. Let's understand something around this microfinance organization. So as I said, it is a self-governing body. It has its own board of members, executive board of members, the CEOs, the chairman of the microfinance industries, everything. And to govern this, they make different policies which is accepted by all microfinance companies working in India. We have around 200 plus microfinance companies which are working presently in India. Going ahead, what do microfinance do? These bodies do. They make laws. They also keep a track of how and what is the developments which are happening around different geographies of area. So, which is a good area, which is a bad debt area, which is all types of, and for this, the microfinance in companies provide data to formulate a custodian. Now, today it is so enriched that a person is defaulting from one particular microfinance company will not get a loan from some other microfinance company. Why? The data. It's a well-designed data management system which they are providing, and many works are getting done through this around this entire microfinance, which controls for a better microfinance industry. Okay, so what it is all about? Almost 95% of the microfinance loans today are given to Indian women population. 98% is through the joint liability group. Now, I think I should explain you a little about the joint liability group and the self-help group before I come down to the important features again. So what is the joint liability group? We form a group of 4 to 15 members. We train them, people who are from the same strata of the society. There should not be somebody who becomes a very rich person within the 15 people group and then they start dominating that group according to it. No, we try to find out same type of work, same type of people, same type of population within the close vicinity of a geographical location. It cannot be like one buddy is here and another person is some 5 kilometers away. That doesn't happen. That doesn't work in a microfinance industry. So it has to be a local area, and basis the individual responsibility of each others, we give each individual certain amount of loan which they look forward for their work, maybe a small farming, maybe some village work, or anything which they would like to take, a vendor or a shopkeeper, anything which they would love to take. Now, here, what is the importance of this group? So when you come down to a group, the group is also liable to make the payment for the entire group of people. If somebody has an objection, it is raised at the beginning of the formation. I will not take the obligation of XYZ person as I know him. Now, these type of things happen. And then the group which forms takes the responsibility of the balance 10. Suppose each one has an EMI of 1,000 rupees a month. Now, if somebody is unable to pay for one particular month, then what would happen? The balance 10 people would contribute 100 extra to formulate those 1,000 rupees on his behalf to the companies. So here is the secured element which comes into it. Now, microfinance industries work this way, and hence the security also for the lenders. If somebody finds that the group is not working fine, they have to report it while the formation of the group. Now, it is very simple to say, but it is practically in the market people live by these words. There are villagers which live by these words. Now, what is the small difference for the self-help group? For a self-help group, okay, one more small difference to understand. For a joint liability, if there are 10 members and each one has borrowed 10,000 rupees, each one has a liability of 10,000 rupees. But in a self-help group, if they formulate a cooperative or a self-help group and they take a loan of 1 lakh of rupees, each one of them is liable to pay this balanced 1 lakh of rupees, because in a group there is nothing as individual. So the entire corpus is given down to the cooperative, and it is then responsibility of all members to return the entire corpus. For joint liability, it is the individual corpus. So these are the two basic concepts wherein there are some similarities. Yes, they both work on the group formation. The group formation has to follow certain disciplines. The groups have to maintain the liability concept, responsibility of each other, and that's where these companies work upon. Let's see how the situations are in the present context. In the present context, this is something which I have from the reports of MFIN. Now, all these data which I will be just quickly going through, just to make you aware about the size and structure of these industries today, because many of you, I'm sure, might tomorrow enter into these industries in their job career profiles. So, looking forward, it's 2,60,000 crores of loaning, which is presently through the microfinance in this microfinance industry. It constitutes bank loans. There are banks which gives through this self-help group model, NABARD model, banks also finance. Even the NBFC companies, there's a difference between NBFC companies and microfinance companies. Microfinance companies, NBFC companies are more into loaning entrepreneurships and other projects for the development, while microfinance is more into individual development, people development, or the persons, their living standards, upgrading their living standards. So overall, it is around 2,59,000, around 60,000, you can say, lakhs crores of rupees, which is funded across it. Now, it's a huge amount which is gone down to the rural, and this is where it's getting churned in the economy. Let's understand a little more. So, this is something which I showed you is about last year. That is by the March 2021. If I were to tell you what is the total good portfolio, is about a lakh of crores of fund, which is already into the. Now there's one more concept into it, which is if you can see the cursor up here, it talks about less than 100 crores, less than 500 crores, less than 500 to 2,000 crores, and above 2,000 crores. These are segmentation of the microfinance companies. Generally, out of these 200 microfinance companies which are operating in India, everybody is not at a very high level. Some are below 100, some are between 100 to 500, which we call the small microfinance, mid microfinance, and the large microfinance. Large microfinance, people who have 10,000 crores of portfolio, means they have a loan given down for 10,000 crores of rupees. So these are large microfinance companies. So this particular report talks about where the growth and the distribution of money has happened. Basically, 72,000 out of this 1 lakh crores is from the large companies, the larger companies. I'll explain more as I go down around it. Now, the new portfolio which has added on for the year 2020 for microfinance is 423 crores. Now, you see During this time, I had the data for 2020, but during this time, we were under the pressure of COVID. But in spite of that, this industry kept on loaning and helping people. Some top microfinance companies, which, as I said, have thousands of crores of their portfolio. Amongst the entire portfolio, 61,900, that is around 62,000 crores, are there for these top 10 companies only. So the top 10 companies constitute around 61% of the loaning. And balance companies, the balance, say if it is 200, or in fact it's 205, so you can say it's 95. 195 company constitutes around 39% of it. Now we will come back to the issues as to why is this disparities or all. We will take that up as per the loaning and the expansions and the business models which they have adopted. Let's see into it further. So client outrage is also very high for these companies. The total clientele outrage is around 7 millions around, which is presently there. I will be sharing those data with you, I think. Okay, fine. Now, here comes a very interesting slide. How are microfinance companies sustaining their business? What is their business model? How do they do? Because if they don't create capital, they actually borrow it. And how do they, if they are borrowing, then what is that they are expensing on themselves, how they are organizing, and how they are doing it. So Mulligan committee recommended a margin of 10% over the cost of fund for the microfinance industry. Now this particular slide tells you how has been the microfinance industry's costing. Now again, presently it is around 13.5%. This is an average. But what happens when you have a large microfinance companies, you have a bigger fall in percentage. So microfinance companies which are bigger can get the funding at a lower interest from bank because of their credibility. And banks would also love to fund the companies which are well-to-do, which have a bigger portfolio. So the rate of interest what they are getting loan is around 9% or 10%, varies around it, and another 10% up. That means with a 10% they can easily play upon or give loan to the customer around 20% or 21%. However, RBI has kept an upper ceiling which is to 24%, that no company should take more than 24% loan on their investments. Now, how do they do? Because if a company which is a small company which gets the capital at a higher rate, because higher the risk, higher the rate of interest. So the small company gets a lower, higher rate of interest. Suppose he is borrowing a fund at 14%. How will he manage? Or he is borrowing at even a higher, say 16% or 17%. How will he manage? Because there is a ceiling. For the small companies, the committee has recommended 12% increase. So 12% would mean that even if he borrows a fund at whatever percentage, it is higher, percentage of management is higher by 2%. So they can make their maximum client payment on 26%, 24 plus 2, 26. All right. This is how these companies are able to constitute and earn profitability. So this is a small snapshot which I tried to show you as to make you understand what is the cost of fund and what is the loaning fund. Now very well understand, if you are being asked to take a loan at 25% interest, would you do that? I am sure no, because we are there. But remember, higher the risk, higher the rate of interest. If you have a collateral home loan, it's at a different rate. If you don't have a proper income or documentation, the rates go up. Talk about a personal loan is always at a higher rate. Similarly, microfinance is also one of an unsecured loan because you don't take any collaterals. You have only the word of mouth of few of the people as a group as your security of return of the fund. Tomorrow something happens, the funds don't come back. How will the companies bear the loss? Hence, their profitability or the margin of things is higher. They have to keep provision for the bad debts also. So this is how the companies are have to charge a higher rate of interest from the people. But looking into a cycle, because a person who invests 100 would earn 120 by the evening. That's what every day he is earning. So at the end of the month, if he or yearly he has to pay a 25% interest, it's not a very much for him. Okay. So what type of products is that what microfinance companies deal with? Microfinance companies deal basically with small loans, the credit loans, insurance, uh, also some savings. Now the product is designed so because if I give you a loan and tomorrow something happens to your health or a death in a family, who is going to repay? So there's a provision that while giving a loan, insurance packaging is done along with it, a medical insurance, death insurance, that any times of casualty happens, the family gets a substantial amount, which it can may be used for repaying back to the financier also. So with this coming into thing, again, you see there's a second level of protection for the lender, which comes into existence. Another important thing, companies have started introducing small saving schemes along with the EMI collection. Now, EMI collection is one of the remittance is one of the very key element or the lifeline of the microfinance industry. How it happens? They have employees who go down and collect the finance from the person, and on a periodic basis. It is scheduled that every month, 7th, the person would come and take it. If it is a 15 days, every fortnight, the person would come and collect the person. You miss once, it piles up, and the next time, the person who is a poor fellow may not be able to pay a bigger amount. So the systematic collection is the most important pipeline of a microfinance industry. And what are the top risks of this microfinance industry? But the most important risk here is not with the people, it's with the environment, the economical environment around. Say, a political interference. We have often seen political leaders coming front, कि loan maaf kar denge. Now, when it goes, these people don't understand and they become defaulters. They don't pay the loan and they become defaulters. What happens? Further loaning stops. No companies or banks would ever give them loan. What would happen if the loans does not go down? Their life and economy goes shrinking. Very critical. There is no political interference is one of the key element presently what happens. Recently it happened in Assam. We had continuously seeing these things time and again popping up from different parts of India, where the political leaders would come up and say loan maaf or we don't pay the loan. There's literally no collaterals which could be managed. But what happens? The people are the sufferers in this case because further inflow of the funds will stop. People will be hard earned if they don't repay. Over the number of years, people have started understanding, and even in this moratorium situation, people have continued their payment just to keep their credit score high or not to get as a defaulter. This is where something which is happening into it. Second are the regulations. As the RBI changes its regulations, every microfinance company has to change their method of working. If tomorrow it comes down to saying, no, the highest limit will be 20%, if RBI comes down with that proposal, the companies will have to manage it. Over indebtedness, that is one loan unable to pay the first loan, you take a second loan, to pay the second loan, you take a third loan, and hence you are over indebted. These type of concepts are the risk to the microfinance industry. Funding. Now, if the microfinance industries don't get fund, now here's a very big thing. I showed you small companies are getting a fund at a 16% rate, whereas a big company is getting a fund at a 9% rate. Now, there's a lot of disparity, which the banks are doing. Looking into it, there has to be a streamline of funding. Now, if microfinance industries are at a moratorium situation, definitely banks will stop making more investment in the microfinance industry. To take care of it, RBI has put certain restrictions for the banks as to put certain money into microfinance as their kitty of investing in the rural development. So whatever they do funding to the microfinance industries, they can showcase it in their balance sheet as a rural development funding or something around that. This has helped a lot of microfinance companies to get funds from banks. Okay, the liquidity, definitely. Competition, definitely. If there are 200 companies, all are working across, we have competition, and hence these are the risks which are involved in running a microfinance company. Now, day in the microfinance employees work. Now, very important to understand. Now, from here, I come down from the personal to more about as now. Here is something which is for you all people. Tomorrow, if you get into the corporate microfinance companies, this is where the situations would be like. In a microfinance industry, first of all, one should be ready to work in rural India, because 99% of the work is there, or focus is there for rural development. So what does they do? People go down to different villages. They are based at different remote locations. They don't operate in any metropolitan cities or corporate setup. They may have their registered office, definitely, and they may have their other departmental office in some HO, which is in a registered office. But generally, their work is spread across the rural belt of India. They conduct, and this is one of the pictures which you can see how they work. A person who is getting into the microfinance industry should understand these pictures. I will just come back little while after this. Let me take you to the small structuring about this. So how does the structures of a microfinance company look like? So definitely you have the board of directors who appoint auditors, external auditors. You have the internal auditors. The board of directors appoints a CEO who runs the company. The CEO also has his own departments, the risk and the credit committee. They formulate the processes and the policies for loaning to it. Apart from that, nowadays, most critical for any microfinance industry is the IT department. A lot of data is there. Online and automation are the key for success of these companies going ahead. As strong as your IT, as strong as your facilities, as strong as your maybe payment system, online payment system and receiving, and your information related to the loans, so goes it. So everybody is going mobile. Everybody is going to payment methods, all these UPI pay methods. Everybody, and hence IT department forms an institute or a department in a microfinance industry. Second, the HR and the compliance. Now, in this particular industry, I have seen the most rigorous HR and the most disciplined employees here. Now, just going back one slide, here, the employees of microfinance industry have to work in the rural area with women. They have to be extra sensitive into understanding the dynamics of a rural culture. This cultural dynamics is one of the key element which every microfinance industry, especially people from the sales and operations need to understand. You need to go and sit on the ground, as simple as lifestyle, as simple you can make it, for the women people to be comfortable sitting in front of you and talking in terms of their loans and all. Here I have a photograph of Muhammad Yunus, the first microfinancer. And here you can see him well sitting with other people, other women, in a very common man. Even a CEO, when he goes down to a field, he is supposed to sit on the ground on a simple chatai and talk his entire business proposal. Now, this is something which every person should understand who is getting into the sales domain. Many people, it might not, people who have been born and brought up in a very urban society may not be comfortable. I remember when I was there, I was asked a simple thing, which I'm making few of the points which will make you understand. I was asked to remove my astrological rings. Why? Don't show off between people. I said, boss, this is something which my astrologer has said to me to wear. No, you have to. After that, you come out of the meeting, you may wear it again. I said, okay, fine. That's how the life is. There are these companies not even allow people to smoke or to do chewing tobaccos. If it is found, people are terminated. When I was the head of learning and development, I used to do initially when the new hires were done, we have a 1 month of full training for them to groom them into this very thing. And under this grooming, we keep them in a hostel type of environment wherein they are paid. During this time, if you are found to be having drinks or smoking or any bad habit, you are asked to not to join. They are given a stipend and asked to let you go. This is something which is an hidden agenda, because you have that right person who can go and create the best image in this particular Indian societies with the Indian women, where women have to be comfortable. It's not about how you think about. You may be thinking, oh, the world has changed and XYZ, but how do those people think? You have to work according to their expectations. Then only they will be opening up to you. They will be comfortable talking down to you. And that's where the healthy relationship between the customer and the organizations run. So this is something which is very critical to you. Apart from that, HR, you have all the positions of recruiters, payment operations, everything for HR. Finance. The finance is, again, people, many of you will be looking forward to the finance. Finance is definitely from the HO-based work, wherein a lot of loans are getting taken from the banks, proper processed, properly invested, circulated, timely repayment. Hence, it has an entire big firm of things. Now, as important in this organization, the sales and operations, similarly, the another important part of this organization is the risk management. So for every branch level worker, where they have 5 salesperson, you have 1 risk person. The role of risk person is to check whether the loan is getting processed in a proper way, whether the company's norms are getting managed, if somebody is not cheating, the collections are getting done timely, the loan which the customers are taking are getting utilized. Because if I give you a loan for poultry and tomorrow you go down and buy a refrigerator, one is a productive loan, one is a non-productive loan. A non-productive loan you will never be able to repay. Hence, this type of checks is very essential for microfinance to operate. So this is how an organizations of the microfinance work, and you have different positions right from the starting point to the vice president level people, all working in different levels around. So that's it from my end about the microfinance industry. I would like to take a few of the questions if you all have.
Sure, sir. It was a wonderful session, and I'm sure students have learned a lot about the microfinance industry as such. because generally at this stage students look after organizations which are established brands, so that they can have good culture, a good brand value, timely salaries. But people or students at this age specifically, they don't look for a company which is in microfinance sector. So yes, I do have a couple of questions. If you permit, I may ask them.
Yes, ma'am.
Okay. So the first question is the digital transformation feasible for traditional MFIs?
Yes. Nowadays, what these companies have done with the penetration of mobile network, all these companies have developed their own software applications. So with on these applications, a customer, now I'm sure you will agree with me that in every village there are mobiles and the network is sufficient enough so that he can do a surfing around. So these applications works on a simple mobile. A person can feed in his number to check whether his installment has been deposited or what is his status. Even everything is to his fingertips for an insurance claim or for any type of support. If he requires an immediate hospitalization and he has a medical policy, he does not do anything. He just need to ping one. The messages are automatically sent down to the respective representatives. They call back, they connect back, and immediately arrange for his hospitalizations. There are risks around, say, this floods. Now there are peril risks also, floods and fires. You just need to have a panic button or the SMS which gets triggered from the application itself. That level of automation has been done, more or less. Companies, all microfinance have moved up to the digital mode of collection through UPI Pay. Okay. Now it is very helpful. I would appreciate that there are companies which are moving. Earlier it was around 40% of digitalization and 60% of cash transactions. Everybody under the guidance of Microfin is reducing it. Now it is around 90% of digitalization. The payments are not given. 15,000 rupees of loan does not go by hand. It's monetary transfer. Similarly, your payments are monetary transferred with a thumb impression. My person goes down for collection. He has his own devices wherein a thumb UPI payments are getting done. So automation is happening, and that is the key source. Otherwise, the situations and frauds in these companies will keep on increasing.
Right. So you mentioned about the job opportunities in microfinance industry. I would like to understand from you as a recruiter, what are the qualities or skill sets you look when you hire people for whatever department, maybe finance, maybe HR, marketing, sales, operations, whatever. But are there some key attributes that you look for when you hire for this particular industry?
Right. Absolutely nice question. See, when you talk about an HR profile or a finance profile or a IT profile, the basic criteria and recruitments is everybody what is known. As a recruiter, you should always focus about the values and the culture of that person. There, I would say this industry has 47% of people turnover. Now, if that is so, what is it not getting it right? Why is this so? And that's where my personal observation is the cultural mismatch. So for particular jobs, if somebody has to work in rural, he should have the bend of mind to go down to a rural and work. Quite an NGO type of concepts which he should look into rural development as one of them, along with his salaries. Definitely he is going to be well paid. That's another part of it. But when he is asked to stay down for months into those areas which does not have a proper into a rural areas, that's where the challenges are. And this is where I would make my point very clear to the people here. You go for an HR, if you are thinking of an office type of concepts into a job, all these jobs are okay. Finance is okay, HR is okay, IT is okay. But if you are looking into a sales career, wherein area managers going on, definitely you are going to be an area manager who is definitely have an urbanized office to handle. But basically your career starts at a rural background or a semi-urban area at least. So you have to be mentally prepared for it. And the pictures which I showed,
Right.
a person has to go down to a village in a group meeting, has to sit down, and that's what a CEO of a microfinance company also does. So if you are not of that temperament, अरे मैं जमीन पर कैसे बैठूंगा? So boss, you will be a misfit in this industry. So these two types, when I say the mental outlook is what a recruiter should also watch, and people who want to go into the sales profile of this particular industry should also understand and learn, acquire.
Right.
That if I go for this job, I will be required to perform this very thing: a long distance travel, very down to earth lifestyle, and very simple people to go and educate them. I have seen, in fact, the people whom we are talking unable to sign even. So you have to handhold those ladies to help them to sign and write their own name. If you are not in that very mental frame of as a helping person, or you think a very a corporate into a very managerial white collar job, then microfinance, other departments are for you, not the sales piece.
Right. So the next question is, tell us some incident where you had to deal with some really challenging situation, and how did you dealt with it?
Okay. Ma'am, for me as a learning head, the most critical phase is to stop a wrong mentality person getting into the system. We had our operations across many of the places, and I had a team of 14 of my trainers who are very close knit, and how they do it. My personal advices and things like persons who come down for training, maybe a smoker, a drug addict, or something, a person who is, and there are lands where these things are very common. If you go down to Punjab or to many parts of India, drinking is not a very taboo or something. It's a common part, but that does not work with our industry. Very strict no, because remember, it's not about what you do, it's about how people will perceive you. So tomorrow, that was the biggest challenge which I had to face. Make very polite and norms around it. How to stop these people getting into the system. How to keep a check upon what they are doing post their office in my training centers. And a lot of things have to be taken care before recruiting us, even a frontliner sales.
So there is a question from a student that what if a group deny to pay the loan? There are risks. So what steps does the company takes to save from the frauds?
Very interesting question. Very interesting question. Absolutely right. People are the concept. See, the concept here is about denial. Now, to help this denial, maybe it's because of some reason. One, maybe they are unable to pay. There has been flood. There has been issues that the work has stopped. Sabji vendor. Now there's a curfew in a city for 2 months, or the lockdowns have happened. We understand the situation that he has himself not earned. How will he repay me the fund? In this case, what we do, we extend the loaning tenure.
Okay. Okay.
So if it is a 2 years loan, it can be converted into a 2.5 years loan. So the same amount of interest is proven. Moratorium actually is the concept behind this very thing. Now, if somebody has intentionally or under the influence of someone stopped payment, so my people would understand as to how to, out of those 10 people, 4 may be willing, 4 may not be willing. How to handle this? We get the people who are want to continue going ahead. The rest who are not willing to continue, we keep it, ballpark them. While one cycle is stopped, and now nobody is going to fund, whereas the same people of the first group who have been regularly paying are getting funded by us as well as for the other companies also. People understand if there's no shortcut. And still, if somebody does not pay, there are around 1 to 2% of the people which are actually our bad debts, which you can maybe it happened. There are certain situations where another type of thing, say for example, the demonetization phase. People did not have cash to pay or the funds to pay, right? Now, what is we people do? We gave them a fresh loan, deducting the previous principals.
Okay.
So if you had a loan of 10,000, you had been paying 2,000 to me, rest 8,000 is balance. So let us do one thing. I issue you another fresh loan of say 12,000 rupees, wherein 8,000 I am adjusting for my previous one. Balance is what you are going to carry on. No extra interest or something is getting managed, and the life goes on in the next 2 years in the time to come. So these are certain real challenges which the companies are facing.
But you
And
also have to start, politely and softly when
yes,
you're dealing with these.
yes. This is something which is very important because customer relationship is the key.
Right.
And we are so sensitive about a customer's relationship because if the relationship damages, the village might get bad, or the bad marks to the village or the geography itself.
Right. So this is my personal question.
Yes.
What inspired you to work for startup? Having worked with so many brands and companies, why this decision at this point of your career?
That's great, ma'am. That's very great. See, I was a person from sales background. My earlier phase of my in the insurance industry, I was into hardcore customer sales. For, in fact, a pretty long time, around 5-6 years, I have been into person to customer dealings and into insurance sales. Slowly, I found that I was good enough to teach people. My interest towards learning and development or training, which is the initial phase of anybody's career. And then when I started talking to people in terms of their personalized things, even if you see in my this particular PPT, I have very less about the data. I did not spend much about data. Datas are all available on the internet. What I'm trying to make a point is your attitude towards the microfinance industry. So my entire efforts is about changing person's personality, their way of thinking, and I kept on developing myself towards this learning and development. Now, once I went down to this microfinance industry, I had an concept of working down to the people into developing the skill set of those set of peoples. But generally speaking, my own interest is about developing persons. That is the talent pipeline and talent development, DAC assessments. I'm an NLP practitioner by myself. So my own feelings were not exactly matching to that often developing a rural or the set of people around the initial job frame. In the microfinance industry, it's not the very high-end learning and development departments. Their major force is to train the first field employees. That's it. Hardly they do a little work with the managers. Top level managerial developments and all, wherein I was doing for the idea seller companies. I had those things in my mind. I used to do the counseling sessions for senior managers or even the very senior profiles, that you say the coaching sessions for the executives. So my own personal interest drove me that I was not getting my job satisfaction there. So I thought of getting into my own setup. Slowly, I will be starting up my own video challenges and channels and start propagating my own consultancies in that sense. So executive coaching, talent development, how can the companies get into better talent, or even as a persons, what exactly is the company looking out of a fresh manager? There are managers in companies who are working on the same profile. One gets promoted, other not. Why? Those analysis, those assessments is what I do. And I help people to give why answer is what I can give you. Why you are not getting forward to it. So those are my fields of it now.
Thank you so much, sir, for the wonderful input. Any suggestion for the batch?
First of all, a lot of wishes to be qualified and start a new direction of their life. Now, this 2 years, whatever they will be doing their management, not to think about jobs in the beginning, is to acquire knowledge. Please focus on acquiring the maximum input and the knowledges which you are going to get. you will have ample of time to decide upon which direction you can want to go. And believe me, even if you are acquiring a knowledge on microfinance industry, you don't know how it's going to be useful in any other industry, allied industries. So this is the beauty of the industries around. I have worked with insurance, I had worked with telecom, I have worked with finance, but my own understanding is आप नहीं जानते हो कि आपकी कौन सी knowledge कहाँ पर काम आएगी.
Correct.
So acquire as much knowledge, whether it's IT, whether it's finance, whether it's HR part, understand them. You will be a better manager once you are on your job profile. It's said the first manager is the first HR manager also, and he is the first finance manager also. So this is way, it's only about what acquired knowledge is what you are getting, and these 2 years are for you.
Right.
Devote yourself, not with the intention to get in there. Definitely it's as a backend, everybody is here to earn his livelihood in a better career for it, but the better career is not about how you are thinking about which industry to go or what to do, is to how solid it is. Remember, once you get out of this college, there will be thousands of people around. Only your specialization can take you forward. If you are a specialist, not just a knowledge gaining, you have to be a specialist in your field, and success will come down to you.
Right. Thank you so much, sir. Very well said. And it was a wonderful session. I'm wishing you luck for your, future endeavor as well. And all the best for your YouTube channels that you will. I'm sure you will tell us also the link, so then we'll share it with students as well to subscribe the same.
Sure.
Thank you so much, sir. Have a good day.
Thank you, ma'am. Thank you, everybody.
Students, please fill the feedback link as well. Thank you.